In this video, we're going to go through and we're going to talk about Cramer's top 10 list. Now, I'm on a mailing list where Cramer sends us his insights, and I think it's a lot of fun sometimes to go through and see what Cramer's looking at and then look at him from a technical standpoint, because Cramer, he doesn't do a whole lot of technical analysis. He's pretty much strictly a fundamental analyst, and so I like to look at the fundamentals nature of the market, and then I like to look at the technical nature of the market. So technicals tell us the setups and the triggers and the entry points and exit points for a fundamental trend. So we need both, in my opinion. We can't just randomly say, oh, well, you know, this stock's doing great because it has great earnings, or, oh, this president of this company said XYZ, and so we think we should go ahead and buy this stock. So those are great fundamental reasons why a stock might rise. There might be lots of different fundamental reasons, but we need a technical setup, something that tells us, hey, the line has been crossed. This is the day in which we can purchase with a higher degree of likelihood that the market's going to move in our favor. And so that's why I like to meld both the fundamentals and the technicals. Again, Cramer, very much a fundamentalist. He doesn't do a whole lot of technical analysis, and so I like to be the technical voice for what Cramer says on his fundamental analysis. So let's go through and take a look at what Cramer has to say, and then we'll go over to the charts and see how they look technically. All right. So he says, this is my top 10 things to watch on Thursday, December 15th, 2022. So day two of the Federal Reserve driven pressure on Wall Street after Chairman Jerome Powell and company Wednesday projected a higher interest rate level than previously thought for when they eventually stop hiking. Surprise, right? We all knew that interest rates were going to continue to rise. Clueless sellers don't realize that Powell is targeting wage inflation, and he's nowhere near where he wants to be. So now they say, hello, retail sales for November drop more than expected, fueling recession fears. All right, let's go down to the next section. He says Barclay raises price target on club holding Wynn Resort to $95 per share from $75. So Wynn had projected that prices were going to be at $75. Now they're saying they're going to go to $95. So keeps an equal weight hold rating, and JP Morgan puts Wynn on its gaming and lodging list for 2023, citing Macau opening more broadly as an opportunity. It's a bet we've been making on Wynn and other club names tied closely to China relaxing COVID rules. Estee Lauder, EL, and Starbucks, SBUX. That's kind of weird to throw those in there. I'm not sure what Estee Lauder and Starbucks has to do with relaxing COVID. Maybe because they believe Chinese people are going to buy a lot of Estee Lauder and drink a lot more coffee. Maybe, I guess. Let's go take a look at these three stocks: Wynn, Estee Lauder, and Starbucks for Cramer's number 2 list. All right, so the first one we're going to look at is Wynn. All right, so here's Wynn, and Wynn is topping out at the Drive 2. All right, so of the Elliott Wave Drive 2. So let's come in here very quickly, and we'll draw a few points in here. This is an A1. This is a B1, and that would make that an X1, and this is an X2. Now, we haven't hit the X2 yet. We got a nice little shelf coming across here that looks like it's trying to hold across that X2. This peak up here is going to be, you know, that's going to be a, well, we don't know right now. It could be, we got a little break right here. So this was going to be a B1. That would be our B2 right there, right? And the reason we label these out like this is our probabilities of markets moving higher, right? So the higher the letter and the higher the number, the lower the probability of a successful trade. We don't like to buy as markets are advancing. We like to buy in pullbacks and then advance as the markets turn and curl and start to advance once again. So we don't like to be buyers up in these high regions up in here. We like to look for them to pull back and then rally once again. So as you can see, this market's getting ready to come in and break the X2 right in here. So this would be X2. Just go ahead and just throw that in there. That's the X2. X2 means that if this is the pullback, we would then anticipate the possibility of a third drive high, right? So drive 1, drive 2, drive 3 would take us up. This would be drive 1. This would be drive 2. This market, we would anticipate a pullback somewhere between the 50% level back into the Fibonacci sweet spot, which would bring us back into this region here. And then we would anticipate a continuation of the uptrend to that third drive. And our initial goal would to see it break that high point right there of 89.65. So that's what we're looking for on win. So right now for me, there's no buy. I'm not anxious to put a position on win because I'm thinking that there's going to be a pullback before we get that next drive into the third drive. And how high that's going to be, that's anybody's guess, right? So let's come in here and look at the next one. The next one they said was Estee Lauder. Let's just quickly drop into Estee Lauder and see what Estee Lauder has to say. And Estee Lauder is basically the same pattern. We're in that second drive. So here's our drive 1, drive 2, drive 3 to the bottom. We now have the retracement. We oftentimes will get, let's go ahead and draw this all the way in here. So we got, this is X, 1, 2, 3, 4. I'm going to bring this all the way to the bottom. A, B, C, and then our ABC, 5 ABC, just like that. So we've completed our complete full Elliott wave. So at this point, what we've got is we've got to come in and anticipate the possibility of a third drive high. But right now, because we've completed the Elliott wave, oftentimes what we see is we see a market get lazy, and it oftentimes will go sideways through this time frame. But technically speaking, if we continue the third drive high, this would be our, right in here, this would be our B1, right? And so this would be A1 down in here, and this would be X1, and then this would be X2. And we would look for this market to retrace half or 50% of the last minor move, which would put us in just like the previous stock. We're going to look for this thing to come back down into this region here. And then we want to see it turn and start to rally once again. And with that next rally, we would look for that third drive high with the initial target breaking that C point right there. And that's what we'd be looking for on Estee Lauder. So let's jump back over to Cramer. Cramer is coming down here. The next one is Starbucks. Let's come in and look at Starbucks real quick. Starbucks. So Starbucks has gone through a 3-drive pattern here across the top. This is our 3 times a charm, right, through a narrow sideways channel. So we're going to take our RAF indicator and we're just going to draw that across there. And you can see that that's that 3 times a charm right there. So we got that sideways channel 1, tried to break out 2, tried to break out on the 3rd time it broke out, and away we went. And this is where we get the 3rd times a charm. So anytime you got a narrow sideways channel, it's very common to see the market try and break out once and then fail, come in, try and break out twice and then fail. And it's that 3rd attempt that generally will break and start to run. So this is where we got our first drive off the new Elliott wave, A1. So that makes this an A1 right here. All right, so that's an A1. And then this is the X1 right in here. And I apologize for my voice. I'm really struggling to keep this going with my voice the way it is. So that's our X1 right there. And we're looking for this market. If we come in here and draw this from top to bottom, all the way back down into the Fibonacci sweet spot, which would bring it down in here, where we look for this market to bounce and start to rally once again. So we would look for to be a buyer down in here as this market turns and starts to move higher once again. So this would be our buy zone in here, depending on what strategy you wanted to use. And we can talk about strategy in another video. So let's come in here and take a look at the next setup. The next setup we got here is Citi. Citi raises price target on Club Holdings Lindy. So LIN to 402 per share from 322. So they're anticipating a continuation of the rise in price. Keeps the buy rating. Okay, so they're anticipating a buy. We own the industrial gas giant for its defensive posture. Analysts there say a faster China recovery would push us toward cyclicals. We also see Lindy as a beneficiary of the Inflation Reduction Act in the U.S. So let's go take a look at LIN, which is supposed to be benefiting from the Biden's program of spending money. So let's come in here and let's take a look at this thing. So we got one, again, we got this nice 3 times a charm, 1, 2, 3, and that market took off and broke. It had a little kind of an ugly little narrow sideways channel after that big gap, came back down, filled the gap, and then just went sideways for a while. But then it did break and continued to rally above the bar, the blue balls, the blue dots. And then as we come across here, we got our nice little triangular wedge formation. It broke the wedge formation, giving us a B2. So this here is going to be our A1 clear down in here. This is kind of an ugly pattern, but nonetheless, it is what it is. So there's an A1. This is going to be right in here. This is really ugly, but this is going to be our A2 right there. So that's A2. And then as this market came up, we have an A3 right there. We go into the B1. So this becomes B1, that B1. And then we start to see this thing come in and break. That B1 was really weak, barely made it across the top of the that A drive right there. So we had a really weak trend here. So that was not good. And so now this market's coming in here. This is the X1 and this is X2. And technically speaking, this thing should come back to that Fibonacci sweet spot, which if we look in here, it's probably already there. So we're right dead center here, the Fibonacci sweet spot. And technically speaking, that should be a turning point. The market should start to rally once again, but this market's been so weak right now, we're going to have to watch this and see if we get a higher high. So the next higher high would be our trigger point for a long entry into Eli Lilly, but this market's not got a very strong top. This looks more like a head and shoulders top formation to me, where we're going to get a left shoulder ahead. This is the neckline. If we get a right shoulder, that right shoulder up in here doesn't break that new high, we're going to see this thing tank. It's going to come up, reject that high, and we're going to get a right shoulder here, and this thing's going to come back down and probably test some of these lower, maybe this 100-day moving average down in here. So that we would extend out somewhere in this region here, and that's where we would look for this market to come back down and start to find support. So not real excited about Eli Lilly from a technical standpoint. It's got to hold that, it's got to break above and hold that right shoulder. It's got to break higher than that previous high in there to get that rally back up. So that's what we're looking for on Eli Lilly. Let's come back over, and the next one we've got going in here is Anheuser-Busch Bud. Credit Suisse downgrades Anheuser-Busch to underperform from neutral, sell from hold. Analysts there see downside earnings risk for the club we own and like Corona beer maker STZ. So Anheuser-Busch is a sell and Constellation Brands and Corona is a buy. So let's go look at Bud. We're going to come in here and Bud is a sell. Okay, well, you can see why, right? If we come in here, Fibonacci numbers, these things are extremely overbought up in here. You can see that we've got our momentum is starting to wane in here, starting to drop down. We're crossing over with the accumulation distribution, and we're anticipating a drop and a fall. To watch this thing come back down into the Fibonacci sweet spot would bring it all the way back down into here. That's quite a drop. And of course, I don't think it's going to do it all at once. I think we'll get a little ABC pattern in here, something like this. And it'll probably come back up, test it, and then come back down and give us a little head and shoulders in there. Probably something like this. And it'll hold that right shoulder, and then that's where it'll probably drop and come cascading down. So that's kind of where we're at with Anheuser-Busch. Not real bullish on this one just because of the massive run up. It's got to give a little pullback before we start to look for it to rally once again. So now let's come back over, and the other one was STZ. So let's look at STZ, Constellation Brands. This is Corona. Oh, okay, they're getting excited to buy this one because of the pullback. So you can see that we've gone through the first drive. Drive 1, drive 2, and then this is all the way back, getting a full reset on this thing. It's not making any 3-drive patterns. This is kind of a 2-drive pattern market, hasn't it? Drive 1, drive 2, drive 1, drive 2. And so it's made that V recovery, but then it came up, broke this high right here, and said, nope, it's not going to happen, and down it's coming. This thing's cascading down. Now, they like this one. Cramer says he wants to buy into this one, but of course, we're not going to buy into this right now because it's a falling knife, and we don't want to catch a falling knife. So we're going to watch this thing come down. It's got to bottom out and then turn around, and then that's where we'll be a buyer. We don't want to be getting into this thing as it's falling. So it's coming down, testing that 61.8 right now. So we'll look for it to hold in here, see what it's going to do, if it's going to bounce off 61.8. All right, so the next one we're coming into is Cohen says Club Holdings Disney made a significant strategic error that cannot be undone when it brought Fox's entertainment asset for 70. I think that's supposed to be bought. When it bought Fox's entertainment asset for $71 billion in 2019. Cohen says the deal accounted for 77% of mergers and acquisitions actively when Bob Iger was previously CEO. Now that he's back Analysts there are skeptical that Iger can do anything to meaningfully alter the trajectory of Disney's business. So they're not real high and hot on Disney. So let's go over and take a look at DIS. So Disney is collapsing out from underneath this big $7 trillion. Is that what it was? $71 billion, $7 trillion, $71 billion acquisition. So this is our 3 drive down here, and it looks like it's going to go for a 4th. This is a drive 1, drive 2. We got kind of a reset here where it came up and tried to go strong again, but then it failed and got us that full 3rd drive pattern. This actually looks like, if you ask me, looks like a Wyckoff spring. I mean, that looks like a Wyckoff spring, doesn't it to you? If we come in here, this is a nice little head and shoulders formation, and we're coming in here. And this thing, this natural trend line actually should come out here a little bit. Let's bring that out across there. And you got that natural trend line across there. This looks like a right shoulder right in here. And so technically speaking, this is coming in and breaking across this neckline. We got that natural trend line. We've got the breaking of the mathematical trend line. And then we got the horizontal, which is right down in here. So the horizontal's down here. Now the question is it going to hold this right shoulder down in here and rally? These guys are saying no. They're saying this thing is not going to rally off of this right shoulder here, which is what we would anticipate from a technical standpoint. But they're saying fundamentally that this market is going to continue to fall. So we'll keep our eye on Disney as well. And this might be a nice place to pick up a put option anyway if we're anticipating a continuation of this downtrend. All right, let's come into the next one. Let's come over to Barclays raises price targets on Royal Caribbean Cruises, RCL, to $70 per share from $66. So they are anticipating a more bullish market than originally thought. Keeps overweight buy rating. Analysts also keep Carnival Cruise Line, CCL, as an overweight rating, increasing their PT to 12 from 10. So let's go look at these two, RCL and CCL, both of them supposedly bullish. So RCL, come in here, and CCL, we'll put that one in here in just a minute. So this is RCL. Well, the problem here is, let's see, let's go and take a look at this. We got 3 drives up, right? We got drive 1, we got tiny drive 2, drive 3, we got a reset in here. Now we're on drive 1, drive 2 once again. And so now with this A1 right here, this is A1, this is B1, and we're coming in here, this is going to be a C1. So we need it to break those blue lights, or this is going down into the, we're going down into the Fibonacci sweet spot off of this past pullback. So this is the buy point. So this is right here. And what we want to see is we need to see it turn. We want to see a higher high. We want to see that we're making lower highs right now. We want to see it turn and make a higher high. And at that point, these guys are saying, anticipate this market growth going up into this region here. So this would be going into, and keep in mind that this would be a C1 in here as it breaks that blue light. And C1s, they are at the top of the Elliott wave. So keep that in mind. This is, these big banks are making this, are calling this a buy signal. And so we're going to anticipate the 3rd drive high in here on Royal Caribbean. Now, the other one that we were looking at was CCL, Carnival Cruise Lines. So let's go put that one in. I haven't got that one in. So let's type that one in. Carnival Cruise Lines. Ooh, that's not very pretty, is it? This might be a good setup for an iron condor or something as this market goes sideways. Now they're giving it a buy signal, but you can see that this is the A1 that they're looking at right there. So they're looking at this as an A1. So this is A1 for those who are technical analysts. They're looking at it as an A1. Just for fun, let's look at this. This is drive 1, drive 2, drive 3, or 3 times a charm, and that thing fell out the bottom on that 3 times a charm. You had one coming in here. This you could call charm 1, charm 2, charm 3. Charm 3 failed, and it fell to the downside. So this is A1. We come in here, and we have the X1 right here, and we're anticipating from this peak down across the top there, that's your natural trend line coming in with the mathematically calculated trend line. We got our 50-day moving average in here. We got our 100-day moving average in here, which are converging. This thing's just going sideways right now. They're anticipating a rise in price. So what we're going to be looking for Let's go off the entire Fibonacci sequence here. We'll go off the high to the low. And it's right dead center right now of that Fibonacci number. We want to see it cross those blue lights. We'll wait. And then once it crosses those blue lights, we'll anticipate. I don't think it's going to be a massive rise. We may get some kind of a spike like that. Maybe we'll see. But once it crosses those blue lights, we'll look for a rise out of this this pullback here on Carnival Cruise Lines. All right. So that's the next one we're coming into is Cohen downgrades JetBlue. JetBlue to market perform from outperform, hold from buy. So they're just going to put it to a hold from their buy. Trims price target to $10 per share from $9. In the airlines group, analysts there like United Airlines as the best idea for 2023. So let's go look at JetBlue and United Airlines. So we're going to pull up JetBlue. JetBlue, that's the one they downgraded. So it's been coming down off this big long downtrend. It tried to make a little bit of a recovery in here, didn't it? It came in here with an A1. This was a B1 right here, and it failed miserably. And then this market just went flat across the bottom here and then dropped out the bottom. So not a good sign for JetBlue for the long side. And as it continues to fall, we'll be looking forward to test this bottom right in here and see if it can hold that bottom. They're saying $9 is where they expect it to come back to by the end of the year. So they're expecting a rally, but how far down it's going to go, we'll have to wait and see. Higher highs and higher lows, watch it cross those blue lights. All right, the next one, they said in here we wanted to go see United Airlines. So let's type in United Airlines, UAL. And American Airlines is failing too. Now they're liking American Airlines better, but you can see it's come through with the same failure 3-drive pattern as we had before. This is an A1 right here. This is our B1 right here, which failed miserably just like JetBlue did. And we've got that same pullback. Now they're anticipating, they're saying if you're going to go long on an airline, they'd rather you go long on United Airlines than on JetBlue. But we need to see this thing come down and find its bottom and turn around and start to go back up again. So, you know, there's some additional downside potential on this market. We need to see it catch, and we need to see it make a reversal, and then, you know, some sort of a ABC pattern, whether it's right there or down here or over here. You know, it's still falling right straight down. We obviously don't want this market. We don't want to buy this market right now. It's a falling knife. We don't know how far down it's going to go. We got some areas of support right in here. This is the 100-day moving average. We got 61.8 down in here. Of course, we've got 78.6 sitting down in here as well. And so, you know, there's some other Fibonacci numbers we could come into, but we've also got areas of support down here that we can look for to come in and test. But there's some additional downside potential on American Airlines if you want to pick up a put option. But this has already fallen, started to drop. So let's come in and take a look at what they've got going next. The next thing we've got is JM Smuckers. SJM, price target raised at Credit Suisse to 165 per share from 145. So that's a pretty big jump. 40, 50, 60, they're taking it up $20 a share. Keeps neutral rating. Analysts there cite improvements in the business model. So let's go look at SJM as our final look on Cramer's list, SJM, and it's already open, and here we go. They're looking for this market to go up. So we can see from a technical standpoint that now is not a good time to be buying this thing. This is, we're going to call this down in here. I'm going to call it, that's kind of all one great big mushed up thing. That's ugly. So we got this big thing here. We're going to call this natural trend line break right here. That's our A1. Okay. We're going to call that A1 because of this big drive right here. So this is going to be drive 1 on this first drive breakout. So there's our A1 right there. And so that makes this A2, I'm sorry, B1. This is B1. And so all that pullback there is B1. And then we're coming in and we're going to break this. This is the X2 right here. And that X2, look at how lousy that is from X1 to X2. The distance between those two, it was not a very good run. It looks like a nice run, but from entry point to exit point is not very far. Just a little bit of a move there. So we need to see this thing, make sure we buy the valleys and sell the rallies and look for these things to pick up down here in these red zones going from red to yellow or from yellow to green. That's an ugly bar right there. But nonetheless, JM Smuckers is not a buy signal for me right now, as this thing's coming down, getting ready to break the X2 right in here. So this is X2. And then as it comes down, we'll look for it to retrace half or 50% or into the Fibonacci sweet spot of this move, which will bring it down into this region here somewhere, maybe bounce off 38.2 depending on how strong it is. But we'll expect it to come in here and start to rally once again and give us that third drive. Now, how high it goes, these guys are saying that they're anticipating JM Smuckers up to 145, actually to 165 from 145. So they're saying 165. So they're looking for it to come up into this region here at 165. So that would be our third drive high. That would be the C drive coming in here on JM Smuckers. But we need it to pull back into this region, turn around, give us higher highs, and start to rally once again. All right, guys, I apologize for my voice. Still trying to get over this cold, but I did want to get a video off for us and talk a little bit about Cramer's 10. And that's a little bit of insight for you on the technical side of these markets.